What is up, my awesome wealth builders? This is the King, and you're watching Elite Finance King. Welcome to the Pride. Let's get into it. Today, we are going to dive into the exhilarating world of Bitcoin and explore the age-old dilemma: to sell for immediate profit or hold it for the future. Wealth builders, if you have 10 Bitcoins, what would you do? Sell them or hold on to them? Comment below with your decision. I promise there will be no judgment. But returning to our main topic, as the value of Bitcoin skyrockets, the decision becomes increasingly complex, right? But don't worry, I've got you covered. Together, we will navigate this digital realm carefully and smoothly. So, what are we waiting for? Let's get started. To start things off, let's first discuss the dynamic world of current market trends. Wealth builders, picture the cryptocurrency landscape as a constantly shifting chessboard where understanding the moves can be your key to success. With Bitcoin riding the roller coaster of highs and lows, decoding these patterns is essential for making informed decisions. You see, market trends act like the unpredictable flow of a river, influenced by global economic conditions, regulatory changes, and technological advancements. Keeping a vigilant eye on these shifts empowers savvy investors to navigate the intricate waters of the crypto market with ease. Now, let's zoom in on a common dilemma faced by Bitcoin holders: the decision to sell for immediate profit or to hold onto their digital assets for future gains. This choice is like trying to predict the next move on that dynamic chessboard. Tough, right? Selling during a bullish trend may seem like a tempting option, securing quick gains. However, the appeal of holding onto Bitcoin lies in the potential for even greater profits in the future. It's a delicate balancing act between seizing short-term gains and betting on the long-term potential of cryptocurrency as a store of value. Wealth builders, as we delve further into the intricacies of determining whether to sell or hold Bitcoin, your king knows for a fact that it will become apparent that individual financial objectives and one's willingness to take risks are significant factors in the decision-making process for wealth building. The cryptocurrency market is inherently volatile, and every investor's journey is unique. It's essentially a journey that requires adaptability and a willingness to navigate the ever-changing currents of the crypto market. Now that you know that current market trends are essential, let us approach this scenario from a long-term perspective. What do you think will happen? Let your king clarify this one. Try to picture this. You've weathered the market storms, seen the fluctuations, and still held onto your Bitcoin stash. It's tempting to be swayed by short-term gains, especially in the volatile world of cryptocurrencies. Yet, here's where the magic of long-term thinking comes into play. Beyond the daily price ticker, consider the underlying technology and its potential to reshape the financial landscape. Bitcoin isn't just a fleeting trend. It's a transformative force that may mature into a cornerstone of the financial ecosystem. Your king feels that selling Bitcoin at a peak might yield immediate profits, but it requires a keen understanding of market timing, which is notoriously tricky. If you decide to sell, the question arises: what's next? Will you reinvest in another asset class or let your gains sit idle? On the flip side, if you opt for the long game, you're banking on Bitcoin's continued growth. The key here is resilience, the ability to weather short-term market storms in anticipation of a more significant, sustained uptrend. Let me tell you this, wealth builders, it's not just about the investment, it's the strategic mindset that involves confidence in the technology and its potential to revolutionize the financial sector. Now, before we move to our next segment, let your king ask you: are you enjoying the ride so far? Let me know in the comments. And while you're at it, share what financial topics tickle your fancy. Your awesome feedback might fuel our next awesome content creation. Now, let's get back to the video. Alright, wealth builders, like any other thing that produces profit, deciding whether to sell your Bitcoin for immediate cash or hold onto it for future potential gains involves a delicate dance between risk and reward as well. you must consider the volatile nature of the cryptocurrency market, where values can swing dramatically in short periods. A prominent risk of selling lies in the possibility of missing out on substantial future profits if Bitcoin's value continues to surge. However, holding onto Bitcoin also poses its own risks, such as the unpredictability of market trends and regulatory uncertainties that could negatively impact its value. On the rewarding side, selling your Bitcoin at a peak could result in immediate financial gains, providing a tangible return on your investment. This liquidity can be especially valuable in times of economic uncertainty or when other investment opportunities arise. Conversely, holding onto Bitcoin offers the potential for long-term wealth accumulation, given the historical trend of the cryptocurrency's value appreciation. This strategy aligns with the belief in Bitcoin's role as a store of value and a hedge against inflation, potentially yielding significant returns over time. Nevertheless, your king must say that it's essential to acknowledge the risks associated with each decision. Selling Bitcoin might mean locking in profits, but it also exposes one to the risk of mistiming the market and missing out on future gains. On the other hand, holding onto Bitcoin carries the danger of prolonged periods of price stagnation or decline, which could erode the value of your investment. Additionally, the regulatory landscape remains uncertain, introducing a level of unpredictability that can impact the future value of Bitcoin. But of course, when have I ever abandoned you? I've got you covered, wealth builders, and to manage these risks, I have some advice for each of them. First, let's discuss the risk associated with selling, missing out. Wealth builders, to mitigate the risk of missing out on substantial future profits by selling Bitcoins prematurely, investors like us can adopt a strategy called phased selling. Are you aware of it? If yes, great job. If not, your king will explain it. This strategy involves selling a portion of our Bitcoin holdings at specific target price levels or market milestones. Your king is knowledgeable about this, and by gradually selling off our assets, we can capture profits along the way while still maintaining exposure to potential future gains. Additionally, setting clear profit targets based on thorough market analysis and risk assessment can help investors make more informed decisions about when to sell and when to hold. This strategy allows investors to strike a balance between realizing profits and keeping a portion of their assets invested in case of further price appreciation. Now, let's discuss the risks associated with holding. We have two, and the first one is unpredictability. Wealth builders, dealing with the unpredictability of market trends in the volatile cryptocurrency market requires a disciplined risk management approach. One effective strategy is diversification. Your king keeps repeating this, but I'll tell you again that by diversifying our investment portfolio beyond Bitcoin, investors like us can mitigate the risks associated with price fluctuations specific to one asset. This strategy involves allocating investments to a variety of different cryptocurrencies or even other asset classes such as stocks, bonds, or real estate. Diversification helps spread the risk across multiple assets, reducing the potential impacts of any single market trend. Moreover, conducting thorough market research, staying up to date with industry news, and seeking expert advice can provide investors with valuable insights to navigate the ever-changing cryptocurrency market. Alright, let's talk about handling the next risk: regulatory uncertainties. Wealth builders, the risk of regulatory uncertainties surrounding cryptocurrencies can be minimized through proactive compliance and a deep understanding of legal and regulatory developments. To effectively manage this risk, investors should stay informed about the regulatory landscape in their jurisdiction and ensure that their operations and holdings are aligned with legal requirements. You see, engaging legal professionals with expertise in cryptocurrency regulation can provide valuable guidance and help us comply with relevant laws. Creating a compliance framework that includes processes for monitoring and adapting to regulatory changes can establish a solid foundation for risk management. Additionally, engaging in ongoing industry collaborations and participating in regulatory discussions can help shape potential regulations and ensure that investor interests are considered in the decision-making process. In conclusion, wealth builders, with proper knowledge, preparation, and execution, investors like us can potentially turn any disadvantage or challenge into a beneficial opportunity. So, your king must say that by staying informed and taking calculated risks, we can minimize our potential losses while maximizing our potential gains in the volatile world of cryptocurrencies. So, my loyal wealth builders, there you have it. If you found this video to be of value, please give it a thumbs up, subscribe, and share it with your fellow financial dreamers. Your support will empower your king to create more financial related videos that can benefit a wider audience. We appreciate your continued engagement. Catch you next time. And always remember, Pride members, life is short and it's too easy to be average. Make a change today.